Hey, what's up, guys? Brent here. So, I just wanted to make a quick video on something that's not meme coin related, but I think is very relevant to crypto in general. And it is something if you are looking to become a professional, not just meme coin trader or crypto trader, but just a professional investor slash trader in general. I think this is something important and just something everybody should be looking at least every few weeks or every few months, and that's DXY. DXY is the dollar index. What that is pretty much the dollar, the US dollar, uh, the strength of the US dollar against other fiat currencies. The euro being most of the weight. You got the Japanese yen, Swiss franc, the um, British pound, all these different currencies, right? This is the dollar's strength against those other currencies, right? Why this is important in our tradings of other assets like crypto or stocks or anything like that is because historically, this isn't day to day. This is historically over the long term on the higher time frames over periods of years or months, the bigger moves. How it usually works is when the dollar is moving up or down with these big moves, assets like crypto, stocks, gold, you know, risk assets, they usually tend to do the opposite. So when the dollar looks like it's going to head up um, due to various things, then we can conclude that that would support a big move up for or the opposite, the inverse for assets like crypto. So right now, the way that we can use this to our advantage, for example, is Ethereum. Right, I do think ETH is near the bottom. If it already hasn't seen it, it's near a bottom of a pretty nice correction here, and eventually will move to the upside. Right now, when I look at the DXY, I do think it's in a bigger correction on the higher time frames and will head to the upside in the next few years, next year or so. On the lower time frames over the last 5 or 6 months, it does look to be corrective, and at some point I do think it moves to the downside, right? So knowing that DXY is going to move to the downside, that also falls in line with my prediction of crypto and stocks moving higher over the next year. Okay, so that's how we can use it, right? Is if, say, we already have a bias about Bitcoin and Ethereum and crypto, we think it's going to go up. If the DXY is telling us that we're going to go down, that's just more confluence, right? Now I'll kind of go over what I think the dollar is going to do over the next few years, and really, even sooner over the next few months. Is I do think the dollar is in a bigger correction, and at some point is going to move to the upside very, very hard, kind of like how it did in June of 2021. Um, and at some point it's going to move up. When it does this, we're probably going to see some type of major recession, some kind of financial crisis, something where markets aren't doing very well, right? If you look here in June of 2021, and you go and look at Bitcoin in June of 2021, it was a little bit later, but Bitcoin topped in November of 2021. So pretty much when the dollar bottomed, shortly after Bitcoin topped. So just like I said, when the dollar's moving up hard, that's usually when crypto, Bitcoin, stocks are moving down. And what do we see? Bitcoin bottomed in December. When did the DXY top? In September of 2022. So yeah, it wasn't perfect, but like I said, they topped pretty soon after. The dollar kind of topped sooner, but as Bitcoin went up, the dollar came down, right? So I do think eventually the dollar is going to move up, but on the lower time frames, guys, I do think that this is a corrective move. And if and when we break below 130, we'll move the dollar down one more time, down to around $97 or 97, not $97. At which point we will bottom and then head up. But like I said, with me thinking that crypto, based on the charts, based on everything going on with the ETH ETF, the new Solana ETF, everything, the technology and crypto moving along, the fact that I think crypto is going to go up over the next year, and the fact that the dollar looks like it's going to break down here, just adds even more confluence and fire to the crypto bull scenario over the next year. Okay, so I hope you guys are seeing this here. The dollar and DXY and these other different things, even though we might not actually be trading them, they're just tools to give us a bigger, brighter picture, a more zoomed out picture of where the markets overall are heading. So kind of conclude what I'm saying, we use the dollar to kind of give us more confluence or more confirmation that our bias or that our thesis for crypto or stocks or whatever we're trading is right. So again, the dollar here, I do think very possibly if it moves down hard here, we've seen 3 months of consolidation here, guys. Just like how we got 3 months of consolidation to the other side on crypto, we've gotten 3 months of consolidation here on the opposite direction for DXY. So, guys, if we break any lower here, if we break below 104.6 here with some strong red candles, there's a very good chance that the dollar heads down a lot for probably kind of similar to how this move went, about 2 or 3 months. We could see the dollar really start to come to move down hard here, which again would back up a the case for a very strong move up in crypto and stocks heading into the rest of the year. So with that, guys, I hope that you took this today, kind of understood basically what I'm saying about how the dollar is just another tool to add confirmation, and it's another tool. The DXY is another tool to our arsenal here as traders, and I hope you start looking at it today. Again, you can look at it on TradingView. It's just something that I would look at over time. It may take a few years or a year or so to really start to get the hang of the dollar and how you can use it for your trading. But I hope I gave you a basic overview today. So with that, guys, go ahead and study the dollar. Go ahead and study these other tools. I think based on the dollar and these other tools here, we're bracing up and getting ready for a big move up in risk assets over the next 5 or 6 months. So with that, guys, I hope you have a great rest of your day, and I'll see you on the next one. Peace.